Hey everyone, welcome back to A Little Cardinal. Today we are going to talk about the sell-off that happened at Centene and my thoughts on it. Centene is a company that focuses in the healthcare industry, and they provide managed care services to government-sponsored programs such as Medicaid and Medicare, as well as individuals and families through health insurance marketplace. So if you have not seen the news, Centene has had in the past week a massive drop of about 40%, bringing the stock to lows that have not been seen since about 2017. The reason for this drop is that management abruptly withdrew their fiscal year 2025 earnings guidance on July 1st. In the press release, management noted that the overall market growth in these 22 states is lower than expected. And from their analysis, they noted a reduction to its previous full-year net risk adjustment revenue transfer expectations. Management believes the impact is about $1.8 billion, which is about a EPS impact of $2.75. So seeing this news as an investor, I got really interested into looking into the fundamentals of this company. So this is what today's video is going to be on. I'm going to give you guys the analysis that I performed and let you know what my thoughts are on this company. So the first step I did was I checked out valueinvesting.io to see what from that website is the current intrinsic value, as well as what exactly the forecasters, the analysts are saying for a price on the company. From the website, we're seeing that the Centene's intrinsic value right now is seeing a 223% upside, where the stock price is $33 at time of the screenshot, and they say the intrinsic value is about $107. And for full disclosure of this source, again, I do not know really what the inputs are on here. I just like to check this website as just a general gut check, as just one risk assessment strategy. But this is not my overall opinion. I do not believe that's going to skyrocket to 107 anytime soon, but this is just a source that I use to look at. Looking into analyst forecasts, we can see that lows are around $62 and highs are around $96. So these are things that I do like to see. And again, if we're looking at just overall on this pie chart here, we're seeing a lot of buy and strong buy. That is definitely the majority of analysts, while other ones are saying hold, and there's only a small minority saying sell. I also checked another source on price targets, and as we can see here, we're seeing lows of about $45 and highs of $89 from this source, which I believe I got this from Seeking Alpha or MarketBeat. Another thing that I did on CNC as a first step was I looked into if there's any trades by insiders or if there's any trades by government officials. So on the government side, what I can see is right before the large sell-off, I really saw buys and sells, as you can see in those little red dots right before the big drop. I saw buys and sells from congressional members of about roughly the same amount, ranging from like $1,000 to $15,000. So I didn't see anything alarming, no really huge purchases or sales going on there. And honestly, looking from this chart, I don't really see anything that looks really indicative of, congressional people buying stocks at perfectly well-timed intervals that might look a little sketchy. Everything looks pretty normal to me on this. Looking to insider trades, so far it appears that in 2025 there have been no trades by insiders, but in late 2024 we can see that the directors, the CFO and CEO were all buying shares at prices around the $60 mark. And these really were not small purchases. These were quite large, with purchases ranging from $1 million down to about $100,000. So insiders definitely have some stake in the company at that $60 price, and they're definitely feeling the pain of this, but seeing no subsequent sales really does give me some comfort. It would be nice if I were seeing some purchases at these prices from insiders, but that might come in the next couple of days. Again, this is still a pre-developing thing at the moment, with this news really only happening within the past week. So after looking at those kind of generic areas, I'll say just kind of the soft numbers, I'm now going to take a look at some of the company's actual hard numbers when it comes to financial data as well as various ratios. So looking at this high-level summary of the company, a few things stick out to me. First, we can see that the company is at a very low debt to equity ratio, which is great. They are not highly levered. They do not have a ton of debt on their books. We can also see that the company has a current ratio of above 1, which is nice to see because that's telling me that the company's current assets are greater than its current liabilities. The company has a book value per share of $56, which is currently above the price that the stock is trading at. And we can see that various ratios such as the PE, the PS, the PB are very low, honestly. A 0.1 price to sales, a 0.59 price to book. We're going to get into those a little bit later in my Z-score analysis, but these are very low ratios. It is trading for very low ratios right now. Looking at the shareholder equity for the company over time, we can see that the company has increased its value to shareholders. And looking at it on a total asset basis, the company has $87 billion worth of assets. Now I'm going to check CNC to the sector median. As you guys might have seen from like UNH, this sector has seen some hardship in the area recently. A couple of these healthcare type stocks have seen some sharp declines. So I just want to check this to the sector medians just to see how Centene is stacking up. And you can tell from just looking at this valuation grade and underlying metrics charts that I have here, CNC and compared to the sector median for all of these numbers are much lower than the sector median right now due to this sell-off. PE ratios, EV ratios to sales, the EBITDA, price to sales, price to book, price to cash flow. All of these are quite lower than what we're seeing in the sector median right now. So this is telling me really that Centene itself is really trading at most likely very undervalued rates in comparison to its peers. Again, that is mainly because of this large sell-off that is happening. And to further look into this to see how these ratios stack up to data over the past 5 years as well as since 2009, we can see that the Z-score for its ratios in PEPS, price to book, are incredibly low in that -1 to negative. And look at the price of sales from 2009. We're almost at a 3, which is a statistical anomaly almost. The price to book value right now compared to the past 5 years is almost at a 3 as well. This is trading at incredibly low valuation ratios that we have not seen for a considerably long time. And so here are a couple of the full data just to show how the stock price is performing, the normal distribution, and this chart right here is to show the PS ratio over time in comparison to the Z-score. So as we can see, the PS is at its lowest that we've seen in the past, since 2009. And on a similar note, here is the chart showing the normal distribution of the price to book value. And this one is the one that really interests me the most, as the price to book value for this company is less than the 1. So the stock itself is trading less than what all of its assets are. So after we took a look at this, I'm now just going to show a couple of opinion pieces that kind of stuck out to me as I was reading different articles for this analysis. The first one is a summary from the Seeking Alpha article that I found. And this author says, even so, they believe that CNC sell-off may have been overly done, with the higher medical activity only expected to trigger an annualized $1.8 billion bottom line impact from management's guidance. However, this sell-off of that 36 to 40% had about an equivalent of $11.6 billion. So we can see that there's a huge discrepancy, and this author is making the point that they believe that this is very overdone. And here's another piece from the subreddit r/value investing. I'm going to throw up on the screen so you guys can give it a read, but to summarize, what this author really thinks is that the stock is very cheap right now. They believe that the business is in a great condition, and they believe that this is really just a mistake with the ACA marketplace plan enrollments, underestimating the cost of who was being enrolled. The author notes that even though currently right now we're seeing that people are being more sick and it's more costlier than what the company expected, the ACA marketplace plans, they reset each year, so every 12 months. So really they think that this is a short-term problem and that this can be fixed through new contract enrollment that will happen in the following year. So now that we have gone over all of these points, what does your favorite little birdie think? Well, in my opinion, I currently think that this is way overblown. I do not think that a 40% drop in the stock is really justified based upon everything that I can tell right now. With these valuation ratios being at such extreme lows right now, especially the price to sales and the price to book value, I really think that right now there is a very good margin of safety on this stock. Now, I don't think that it's just going to rebound overnight, but I do think within the next 1 to 2 years, we are going to be seeing good rebounds. It is important to note that Centene is expected to report its Q2 2025 earnings later this month on July 25th, so I'm going to be paying a lot of attention to how the stock moves at this point in time. However, really, how I see this situation is that if Centene misses what is currently expected by analysts right now when it comes to these earnings, with what's already been priced in, I just can't believe that there's going to be much more drop in the stock price at these levels. I just think that the odds are in the company's favor when it comes to their stock price movement. If they beat any type of expectation right now, we're going to see just a larger move forward in comparison to if there was a miss. I believe that would be a much smaller move. And so I put my money where my mouth is, and I did buy shares of Centene, and my purchase price was at around $33. So with that, everyone, that is my personal analysis over the stock of CNC. I hope you guys enjoyed the video.